Mr. Kalyana Rama of Concor as well. We've got a miss on the Q3. So, Mr. Rama, just to understand, what explains the sharp drop in domestic business profitability?
Actually, market is very down. So things are. We thought that this quarter the things may look up, but the scenario is not that good. It's a subdued thing. So both export, imports, they are dull, and domestic business also is quite dull in the last quarter.
So, so then what's the outlook going ahead? Because if we're seeing a weak market, what's the kind of run rate that would be feasible?
Now, as I mentioned last time, this time we are trying to maintain the same volumes as the last financial year. So if I look at the 9 months over the 9 months of the previous year, we are still positive. Positive on the revenue side, positive on the profit side, and also operating margin has gone up. Volumes wise, we are just slightly less, around 1.5% less than last year. So as the revenue figures concerned, I think we'll be able to maintain last year levels and improving slightly our margins. Volumes wise, this quarter will finally let us know what will happen to the volumes as overall the financial year.
EXIM realizations also below estimates. Again, when do you see improvement coming in?
I can't make any guess on that. See, the economy has to look up. As of now, I think the exports, imports are not picked up even now. So, yeah, there are certain volumes going up at ports, but then because of the market conditions, there's a lot of discounts going on in the transport sector, but we are not participating in all the discounts. So that's why our bottom line is okay. We are able to maintain our margins.
So, will you be able to sustain margins in this kind of uncertain environment, Mr. Rama? Anything you're doing to kind of cushion yourself? You're not sounding very positive, going forward. You're expecting status quo from what I can tell so far from your commentary. Yeah, go ahead.
No, I don't think, see, I am not giving any negative vibes. Yeah, because the economy is like that, so I can't give you a positive that everything will be fine, humpy-dory. That's basically because we are in the service sector, we depend on the economy. But however, we are looking at some diversifications as some of in the domestic sector, we are working on giving, bulk transportation in containers. That's a new field which is in fact giving us a good traction. Now we started already doing some food grains in bulk. Last year we did some commercial runs, and this year we are expecting demand in that. And we are also looking at cement for doing it in bulk in containers. So we are trying to get into the new areas. So that there we are expecting some new momentum to pick up in the coming financial year. And the present business, what we are doing in containers for the EXIM and the domestic, that we depend on the economy to improve.
Sure. So Concor is also supposed to be the biggest beneficiary of the Western DFC commissioning. Are you penciling in anything on the back of that? Is it a sure shot? Could there be delays?
Pardon, can you repeat that?
The Western dedicated freight, sure. The dedicated freight corridor, how is that likely to benefit you? Is that something you're already factoring in?
Yeah, of course. There is no doubt that once the dedicated freight corridor comes up, we get some benefit because we are already fully ready to start our operations on that. All our handling depots are ready on the dedicated freight corridor where we want to start doing our hub operations. And as my colleagues in dedicated freight corridor, they talk about running the trains by maybe April or June. We are expecting that once it starts, we will be able to definitely reap in some benefit because of the scheduled running of trains, which today is not possible because of the congestion on Indian railway network.
Okay, fair enough. In terms of otherwise on strategy, have you also consciously reduced low lead distance and lower EBITDA margin volumes to maintain profitability?
Yes, yes, of course, that is true. That is true. That's why our market share has slightly dipped, but it's a very conscious decision. We don't want to participate in those price wars. And we are not doing any negative margin business. All our transportation and all our activities are with positive margins.
Okay, fair enough. Where do you see the maximum potential in terms of order book, Mr. Rama, going forward? Anything that's on the radar, something that you could leave us with today?
No, see, we don't get any order books. We only give a service to the customers. As I mentioned, two things for the next financial year what we are looking at. One, just now I mentioned earlier, the transportation of commodities in bulk. That's one area where we are expecting good traction to start coming in. So this, along with container as warehouse concept we already started, the things are picking up. And we are also giving an asset-light model of establishing some sort of infrastructure to start moving perishable goods. We did one from Andhra Pradesh, wherein banana got transported from a wayside station with a temporary setup. It was very successful. So such sort of innovative things we started doing. And DFC, as we just discussed, is another thing which will definitely add good things for the next financial year. Maybe these are the two things we can look forward. But anyhow, let the last quarter be completed, then we can come up with our guidance for the next financial year.
Right. Thank you for joining us, Mr. Rama. At least you had a smile on your face by the end of that conversation. Always hopeful.